Hello, bonjour, and miigwech. Welcome to what I call Wading Through Economic Filth or Wealth of Nation, where I seek to explain things going on in the Canadian and global economies. I'm Greg Quinn. I've spent the last 2 decades as a business reporter in Ottawa. I have a master's degree in economics and in journalism. I'm trying to merge that old school thinking into this evolving world of media tech at a time of rising disinformation. I also wrote a book, which you can see over my shoulder, about the works of Canada's central bank. Inflation and affordability have dominated society in the last few years. The Bank of Canada is a big part of that picture when it comes to these topics. So there was a time in this great land when if a politician said anything remotely of substance about the Bank of Canada, it probably would have been a lead story in most business coverage that day. In recent years, politicians of almost all stripes have weighed in on the Bank of Canada and monetary policy to varying degrees. The most prominent, Conservative leader Pierre Poilievre, before the last election, he said several times that Governor Tiff Macklem should be fired for incompetence. He gave a couple of different reasons for that. Inflation was allowed to get out of control, or because the bank's pandemic-era program of buying government bonds at times was called a sop to excessive liberal deficits. Former NDP leader Jagmeet Singh said the bank kept rates too high and risks a needless recession as inflation was already being conquered. Liberal ministers in the government suddenly found themselves kind of tepidly backing the bank's independence, but they cheered more forcefully when interest rates were lowered. They often tied lower interest rates to claims that sound government policy had turned things around. The Parti Québécois, as one of its first economic pledges ahead of an election coming later this year, has said that if they win the next election and a referendum on leaving Canada, they will create their own central bank and currency. This is a major shift from the 1995 referendum when they famously created ads where the loonie became the O in the word we to separating. The current PQ leader says the Bank of Canada isn't geared to handle the particular needs of Quebec, suggesting the province is sacrificed to the needs of, say, Ontario or Alberta. All of this seems to be in line with the era of increased global populism and mistrust of institutions, and because politicians are more eager to respond to online discourse, and online discourse that itself quickly often goes into rabbit holes and conspiracy theories and things that are just not true. Central banks, of course, also put themselves into the spotlight. They moved interest rates up to highs unseen in at least a generation. That was also because inflation rose to the fastest pace in quite a while. In Canada, housing costs became some of the most unaffordable in the world, according to the International Monetary Fund. In some of my previous videos, I mentioned the Bank of Canada is a creation of Parliament through the Bank of Canada Act. The bank is accountable to Parliament through the Finance Minister and also through testimony to committees of the Senate and House of Commons. Ultimately, as I said last time, the bank over time can become what Parliament and Canadians want it to be. But underneath the short-term criticisms of the bank during the difficult pandemic era and recovery, the political criticisms did not come with any major calls for reform in how the bank operates in general. In other words, what the bank has to do in the medium and long term to stabilize inflation in the economy. That's even after the bank deployed so-called quantitative easing for the first time during COVID. Quantitative easing, or QE in economist lingo, is a program essentially of massive purchases of bonds, and usually federal government bonds. I would say that Pierre Poilievre did talk about enforcing a strict policy of just targeting inflation after he proposed firing Macklem. But it's not exactly clear to me how that would work. Again, the Bank of Canada has a single target of inflation, and in the last refreshment of its policy dialogue with the government, there was some language added about seeking maximum employment, but only when the inflation goal was being met. Economic history around the world has tended to show that independent central banks are better at controlling inflation and stabilizing the economy. Consider a scenario where the economy is weakening, a government becomes very unpopular, an election is coming up, and the central bank is keeping policy tight. Politicians want growth boosted now before the election, and they often prefer lower interest rates, and that might not be in the best interest of the country. Put another way, have you ever heard a politician call for dramatically higher interest rates for our own good? The Bank of Canada is also given independence in setting interest rates in the short term, and there are safeguards against other kinds of government interference. But this wasn't inserted in the original legislation that founded the bank in the Great Depression. Instead, we went through a very painful experience with former Governor James Coyne. The government, in short, wanted to remove him, started going through Parliament to get that done, and then ultimately failed. This created months of awkwardness. This was a clear misfire, and it exposed questions around who is ultimately responsible in a democratic government for monetary policy. Even if you have an independent central bank, isn't the government actually in charge? And what is supposed to happen if there's a major rift between a government and its independent central bank? As it stands now, the law provides that the finance minister, in consultation with wider cabinet, can send a direct written message to Parliament about a disagreement. Governors have said that kind of message would lead them to resign. This system makes clear in a democracy that an elected government can switch things up if they want, but the political cost will probably be quite high. Prime ministers are reluctant to sack a finance minister even because of what it would say about the government's trajectory. And so no government has ever moved to dismiss a bank governor since the Coyne incident and the revised legislation. I think that's because explaining why the government suddenly has a better idea than the Bank of Canada about fixing the economy would come at a very high cost. To go back to arguments that political parties made about the Bank of Canada in recent years, I covered a lot of that in my book. But first to say, I'm not a political pundit. I'm not here to make my own pronouncements about how the Bank of Canada should function. But most economists would say that you can probably quibble that the bank perhaps waited too long to begin raising interest rates when the economy came out of the COVID lockdowns and inflation started sweeping up. Some also say that perhaps the bank could have cut interest rates a bit sooner as inflation came down again. But in general, everyone I've ever spoken to or read about, or you can look up, says there was no question that the economy was going through a major upheaval around COVID, and any decision was being made with less than ideal conditions. The way I think about it is the smartest health officials in the world could not tell us when a vaccine would be available, when the pandemic would end, and when things could go back to normal. So as an economic policymaker, not only did you have the uncertainty of what was going on in the economy and trying to predict growth and inflation, you had to make that forecast knowing that underneath that were certain assumptions being made about what was going to happen to the mortality of people and the health of the nation. That makes it impossible to do policy with any kind of precision. Another thing I would say in terms of the criticisms of the Bank of Canada is there's no assertion that the bank ever stepped beyond the legal limits of what it was allowed to do. And there was never really any substantial proof that Governor Macklem took on any political advice or pressure when he was making decisions about what to do. But specifically, I think it bears a little explanation about the conservative arguments about the bank using its purchases of bonds to underwrite Trudeau's big deficits. Firstly, Canada is not alone in using quantitative easing. In fact, in the 2008 housing crisis in the US and Europe, the Federal Reserve, the European Central Bank, used quantitative easing. The UK and Japan have also used bond purchase programs. Canada, due to our own circumstances, did not have to use it back then. So we were able to learn from their experience. And Bank of Canada officials learned from that and spent years giving speeches here about how QE was eventually going to become part of their emergency toolkit. Private economists also consider these bond purchases to be an extraordinary but very justifiable use of monetary policy. Most economists also believe that in major downturns, it can be effective to make these massive bond purchases because the Bank of Canada's rate is only directly influential in overnight markets. When you go to the kinds of loans that consumers and businesses make, their terms of 5, 10, or 20 years, the Bank of Canada is influential, but there's no obligation for investors to make loans at the rate the Bank of Canada is leaning towards. So going into the bond market and directly purchasing bonds can help further drive down interest rates on the loans that households and businesses need to continue their operations. More importantly, and this goes back to why the Bank of Canada was created in the Great Depression, banks can simply freeze lending. It's too risky. We're not going to lend to anyone. We are just going to sit on. We're going to sit on the loans we have, hoard cash as best we can, and the economy will suffer. When the bank purchases bonds, they ultimately put something like cash on the books of major banks, and that gives them reason to continue to lend. There was also some focus on the fact that the Bank of Canada lost money in some of these operations. In fact, that is almost built into the way the program works. Without getting into too much detail, when the economy recovers, market interest rates rise on their own, and that can lead to a situation where the particular type of financing the Bank of Canada made with banks loses money for the central bank. The losses were not on a massive scale. They weren't nearly as large as the deficits that Parliament ran. So the scale of that was not too bad. And also bear in mind that the Bank of Canada in normal times makes a lot of money off of what's called seigniorage, the fact that they can create money, send it out into the world. The money, it costs them almost nothing to produce, and they kind of get value back for that by buying assets. So over time, the Bank of Canada is never really going to lose money. I will say, I believe there are some questions still outstanding around the bond purchase program, around the exit strategy from such extraordinary measures. When do you know how to get out? Don't you have an obligation to get out as soon as possible and let other parties take the reins of the economy? And questions about whether we got value for money out of the program. After all, quantitative easing was worth hundreds of billions of dollars. That puts it on par with the emergency deficits that Parliament authorized during COVID. And, Parliament certainly has to account to the Auditor General for whether or not there's value for money. And you could say with programs like the relief checks sent out to families, it's easy to say that the benefits were very high and very clear and immediate. The government was aiming to keep people at home, paying them not to work, paying them not to congregate in public and potentially spread a dangerous disease. With the Bank of Canada's program, you could say, well, you lowered bond yields, or you lowered the cost of borrowing for companies and households for a limited amount of time and for a certain amount after you had already cut the bank's regular interest rate to zero. So it's less clear that kind of a program provided benefits on par with the amount of public resources we placed at some risk. Or, to put it another way, there's often a question of trade-offs. Couldn't Parliament or the government have done more through fiscal policy to prop up the economy and had more direct accountability and more ability to measure the quality of the results? But to marry the politics with these outstanding questions, I think what you also have to say is figuring out the exact costs and benefits of what the bank did during the pandemic is something that will take years to find out, and not just the amount of time it takes to figure out the quality of the economic recovery we've had from the pandemic, but for all the academics to do the research and figure out all of their studies and come to some sort of fact-based consensus. Given the fact that we've had more tumult since then, the continuation of Russia's invasion of Ukraine, Donald Trump's tariffs, and shocks in the global economy, it may be almost impossible to untangle the exact effects of the bank's policy on our economy in recent years. Another element of this is, in a crisis, sometimes you just have to win the war. And in the middle of the crisis, If a governor of the Bank of Canada can't handle taking the risk of deploying massive financial resources and of potentially being wrong, that person probably shouldn't be governor in the first place. And a government similarly that will not have the confidence in its economic counterparts in dealing with the crisis and coming up with a coordinated response may suffer a similar problem. Scrutiny of monetary policy with, again, long-lasting effects and benefits and costs is in this case very far out of sync with the political cycle. We've seen governments and finance ministers switched up fairly often in recent years. You know, if politicians get into the habit of demanding immediate short-term clear results from monetary policy, which even in good times takes a couple of years to work its way through the economy, that's potentially a problem. Another way I should point out that the bank is shielded from this kind of political meddling is that governors serve 7-year terms that can be renewed. In other words, to be guaranteed of having the power to replace a governor under normal circumstances, you, in theory, would have to win back-to-back majority governments. That's and you would also have to have enough time to sort of appoint members to the Bank of Canada's board, and that is something that takes place over a course of years. So that is a shield from day-to-day politics. But in the end, until it's clear that we have a better way of handling a major downturn, it might be best to leave our thoughts about political swipes at the Bank of Canada in its own bucket. Take them with a grain of salt. That's about everything, but before I close, rather than to tell you to read my book, I want to recommend a book that I found useful. This one is called Stress Test by Timothy Geithner. He was the U.S. Treasury Secretary during the 2008 housing crisis. The book goes into great detail about all the things that went wrong, all the things they had to do on very short notice to try and get the U.S. economy out of its funk. And I think, in a way, to touch back on what I said earlier, he came up with a motto: plan beats no plan. In other words, if you're going to sit around and criticize the course of action that the U.S. Treasury was taking to try and fix a very grave crisis, you'd better have a really detailed plan of your own that sounds a whole lot better. Anyways, that's it for now. Hope to see you again soon. Thank you.